I mean, obviously, we all know that the African penetration rates are so low at the moment, and everyone always talks about the need to increase that penetration level so that the market can grow. Everyone's got a bigger pie to share. But I'm wondering, and David, I don't know if you want to start us off on this one, but is it a challenge for insurers, because it is exactly, it's moving you into kind of uncharted territory, slightly less comfortable classes of business, personal lines or SME or micro insurance. I mean, is that where some of the challenge lies? Do you think, David, that insurers have relied on that kind of comfort zone to date?
Yeah, but coming to your question, Liz, I think you raise a very important point that in Africa we have tried to keep growing in our traditional lines, and we've been comfortable there. I think to the detriment of the growth of the industry. Just coming here to Zimbabwe, for example, I think we have had other challenges other than the ones that we are talking about here of an economic nature. But what we have seen over the past, which is very interesting, is that we have actually seen big insurance companies or the traditional corporate underwriters going into niches where they used to not even have resources to deal with. For example, if you look in our life sector at the moment, you find that initially the life companies did not want to have anything to do with funeral business. But as we speak, I think if you remove the savings products, on the risk side, the funeral insurers in Zimbabwe are actually now the biggest, biggest underwriters. Same on the general insurance side, where you find that a lot of the bigger companies now are using a lot of aggression to use digital platforms to actually also participate in a big way in the lower or the statutory classes of motor insurance, because those are the ones that people can afford, and those are the ones that are growing. And with what has happened with COVID in the past past months, you can see that that trend is likely to continue. So I think that you raise a very pertinent point to say that we need to look at the other classes and maybe think about increasing penetration from that end. What we have seen on the traditional products is that there's been a lot of pressure. I think in Zimbabwe, the pressure is even higher because we have just completed another cycle of currency reform, so you can insure in United States dollars again. So we are seeing a lot of pressure in the pricing. For example, someone can just get a quote from Asia at half the price that you were talking about. So even when you are talking about the hardening of the market, I think I would agree with what Lauren said previously, that it has happened maybe to our reinsurers, but it has not been passed down to the direct writers as we speak, because a lot of the business is, because of the transition, it's still proportional. So there is really no basis to be hiking the rates on the non-proportional covers.
To include the 2 points, okay, and just the first one is you need to be clearly, it's an opportunity for insurer and reinsurer for this situation, because a lot of governments decided to give some options how they can improve the financial situation for the SME. So it's an opportunity to secure these assets. So we need to combine this load, okay, with a specific insurance in order to be sure that, of course, these companies that have this function of this load can succeed. So how the ecosystem can work, okay, it's another point, but it's clear that we have an opportunity. But you need to be sure that with this crisis, you will have another phenomenon. And it's clear that we will see inadequate and inappropriate maintenance in the plants, okay? Looking for a cost saving. So we will have increasing frequency of risk and of claims. So we need to balance with, is it important to move very quick on this type of a specific line of business in order to improve the penetration, or you need to be careful and to be sure that this risk is appropriate. So my point is, it's clearly that with crisis, we have less maintenance. So we need to have a visit. You need to know exactly the risk. I have another point, very important for all the industry, and I am talking about coal policies. Coal now, it's very important for our African markets, and not only with the COVID, but before, for sustainable position for all the reinsurer and all the financial investor. The decision of stopping underwriting this type of risk translates a reduction of the capacity and a lack of this sector in Africa particularly. And it's clearly that it's another opportunity that we can aggregate a specific capacity for African player in order to provide this type of sector. So it's not linked with the COVID, but it's linked with the transition that we will have. And it's clearly sustainable to give insurance for these markets, because it's not reasonable not to increase the price for a specific coal plant, or for because we decided not to underwrite. It's not sustainable.
On the coal front, I fully agree with Youssef. Look, Africa is not the culprit in greenhouse gases. In Africa, we have the lowest greenhouse gas emissions of any continent by a substantial margin. If you exclude South Africa, it's virtually negligible compared to what's going on in the US, Europe, and in Asia. The bigger issue in Africa is 600 million people don't have access to electricity. That's the biggest issue. And denying them access to electricity because of the sins of the West punishing Africa is wrong. So I'm totally with you on that, Youssef. So I think as a group here, we can think of a way how we provide cover for coal ourselves, and how we encourage new energy sources to be green energy sources, but coal is still very, very important for most countries in Africa.
If I may just add to Mikir's comment here, I did some research the other day on Lloyd's position when it comes to coal mining risks. Obviously, my perception was that the shutters had come down in Lloyd's, but that's not the case. Lloyd's has taken a very practical view of a gradual reduction in participation up to 2030. So it's recognizing the global trends of ESG, etc. But then it's bringing in commercial reality as well, that you cannot just withdraw capacity overnight because popular press says it's what you need to do.
I think we do need to think about a new way of insurance, a new way of reaching the clients, making the triggers for claims easier, making the payouts for claims faster and easier to help the cash flow of clients, making the claim amounts more discernible for insurers and reinsurers, so we know where our losses are for a certain event, rather than having to think about the expensive loss adjustment process. And for us, that means parametric. So we are, just so that everyone here knows, we are launching parametric covers in every line of business, not just agriculture. We're launching it in property, in political violence, terrorism, in political risk, trade and credit, in construction, in energy as well. So for us, we're using parametric as a different way of insurance, not a product line. It's applicable to every product. So we've got some interesting products coming out, but I think that's the way we increase penetration, and that's the way we give credibility to how insurers can help industry.
It all comes back to what we see as brokers. We see both sides. We see the insurers and we sympathize with them. We listen to the reinsurers who are also our clients, and we sympathize and empathize with them also. What we feel as brokers is there is a mismatch. It's as if everyone's fighting a different battle to remain relevant in their own company or to remain profitable as a company. So while the retros have their own idea on what pricing should be like and what they need to sustain themselves, like Chabala mentioned, on the ground, they have to cut prices to sell their products to, again, remain a viable entity. What we are lacking just now, what I feel, although I have seen a lot of initiatives coming in now in Africa, is in every country, the reinsurers have been doing training and trying to bring awareness to the insurance companies. But I think that needs to change the focus rather than simply training on what is insurance and things like that. A focus on the importance of sustainability of that product, of the insurance, a focus on why the pricing is what it is. Because it's only when the reinsurers who see the global picture are able to bring the message home clearly to the insurers who only see their own little bit and understand their own market losses, can come together to understand the importance of technical pricing for their particular country or their particular sector. And also the reinsurers to avoid bringing the entire global pricing into the local sectors. So that's just what we see is that mismatch, and we feel that with everyone fighting their own battles, they have to come together and understand that there is a common goal. And that common goal is the insurance penetration in Africa, which I know that Mikir just touched upon, is what they're making an effort for. And I think Chabala's company also are trying to make an effort by increasing efficiency using digital means. So I think what we need to think about is what is that common goal we can come up with to increase penetration despite hardening in terms of making all the pricing sustainable.
There are two issues that have been raised by Mikir that are absolutely critical, and also I think comments from Vinita that are absolutely relevant to this discussion if we are now going to direct it in the context of penetration. Number one, Liz, I think we all believe that the Africa insurance penetration conundrum arises from the fact that despite the fact that the vast majority of the African continent are not participating on the industrial level component of the economy, our focus in terms of where capital is in fact directed in providing insurance is at the corporate, large industrial, mining risks. The difference between ourselves as underdeveloped markets and the global market is we are primarily focusing in terms of competitiveness, in terms of resource allocation, where we shouldn't be. We are not focusing on the retail markets, which are the most significantly underdeveloped across the whole globe. And unless we are able to, one, come up with a product or with products, as Mikir has indicated, that are attractive to the vast majority of our populace on the continent, products that we can sell viably to those, there is absolutely no way we can resolve the penetration conundrum. It's not going to happen. But then you then juxtapose that against capital. For you to be able to develop the products, for you to be able to come up with business development initiatives to make the investments that's required in marketing and selling, and insurance is a very difficult proposition to sell. For you to be able to provide, the markets with the kind of awareness campaigns that you have. Look at South Africa. You get into South Africa, you watch television, every second advert, every 5 minutes, you are bombarded by an insurance message. You don't see that across the whole continent. So you need long-term investment. You need long-term capital to be able to do that. What kind of capital are we getting on the insurance, in the insurance sector in Africa? When I got into Continental Re, I was quite shocked. We had capital from a PE fund. Return on equity expectations were 30%, right? And that was short term. And you cannot, as management, implement the kind of long-term measures. And it's happening across the whole sector in Africa right now. Implementation of the long-term measures that are required to increase penetration can't happen. And then what we are seeing now, because we have focused capital and all our efforts on the corporate, and as Chabala mentioned, margins are thinning to a point where it's threatening the viability of the whole industry. It's now becoming unattractive to capital. So you are now in this vicious circle where we are focusing efforts, where capital has been deployed, is a segment that's now threatening the viability of the industry. 45% of our business in Continental Re is property and engineering. Right now, if you look at my June numbers, property and engineering portfolio is almost sinking the whole business. It's in such negative territory right now. It's impossible for me to hit the return on equity expectations of our shareholders. So capital is going now to be sucked out of the industry, primarily because of the fact that we've been focusing in the wrong segment, and the long-term investments that we require for us to be able to increase penetration on the retail side, which I think is where we should really be directing our efforts, is now threatened because no one is willing to make an investment in the sector anymore. I think that's really the point I was trying to cover.
I believe that reinsurers have deeper pockets than the insurance companies. It is a fact, we all know that. And part of the cooperation of the insurers and reinsurers to increase penetration is possibly contributing to, like you just mentioned, is you're bombarded with information about insurance in South Africa, you're bombarded with advertisements. There was a time many years ago, I don't want to say how many, when I was in the Kenyan industry, we had a problem of insurance awareness and insurance penetration. And the Association of Kenyan Insurers got together, created a fund, and used it for advertisement for the general population. And we had billboards all over Kenya talking about the importance of insurance. And that significantly contributed to raising the awareness of the people and a little bit of boost to the micro-insurance sector. So this is where reinsurers can, in conjunction with the right companies or the right associations, each country is unique, each country is different. But I think that if such investment is done by the reinsurers, it should help to achieve our common goal. And basically, if our insurance companies know that this is the common goal, our clients, they will appreciate it and they will be willing to accept more information on technical pricing and improving their own business models.
I just wanted to maybe also flag another concern or maybe a risk that we have on the continent, and that is that if we do not invest enough in our human resources and our technical expertise in terms of the new risks and the new developments and the new demands on expertise, then we could also be left behind in the future. If I think about data analytics, about cyber underwriting, cyber insurance, the new classes of business that are developing, we really should not assume that the average property or motor underwriter, with absolute due respect, is simply going to absorb the skills to also look at new risks and new requirements to be a technically adept underwriter. So it is, whilst we faced all these various challenges that we've listed, unless we also have a real budget, a real vision to also invest in our resources to cope with the future requirements of underwriting and of pricing, we do run a risk of being left behind by the world. And I just wanted to comment that we forget in the middle of all of this the investment in our resources going forward. Thank you for the opportunity.
Thank you. Mine was really on the issue of the capacity for coal mines, which according to is it Udai who did state that after 2030 there might be no capacity. But if you look at Africa now, currently there's no electricity and a lot of power is coming from coal. Most of the power stations, actually, there's a lot of investment going in. So I think as you, as some of the big brokers, you need to try and convince the underwriters, to Trevor and company, to ensure that we are on the other side of development. And I think there's still a long time to go for Africa before we do away with coal. Right now, we saw Spain in investing, I think of investing 4.3 billion in electric cars. And you think Africa is very, very far behind. Very soon we'll hear people saying we don't want to insure cars powered by fuel. So I think we need to look at that and ensure that otherwise we'll end up paying much, much more as well. It might end up as a cartel that, just like retro, there are very few reinsurers offering retro capacity. That's why Lawrence was talking about 15 to 20%. The same thing, after 2030, we might end up with 5-10 underwriters writing coal mines, and the price is just going to go up.
Yeah.
But this is, I think, where the strength of reinsurers in Africa can come into play, because you guys understand the nature of African risks.
Yeah.
So it is your duty to come together and create the future capacity that you feel is needed, which the international markets will not be able to offer going forward. So that's your strength, and that's in your hands.
From Africa Re's perspective, would you agree with Udai there that you actually have an opportunity to step up and make the difference?
Okay, so I wanted to put a few points here. I think the reason why insurance and reinsurers are not investing too much in retail business is not that the segment is loss-making, actually, in terms of loss ratios. It's mainly because of the cost involved in doing this particular business in terms of marketing, policy administration, premium payment, claims payment. So when it comes to potential areas of savings in these areas, I think Mikir already talked about parametric solutions, but I would want to add more generally that we need to explore how to harness technology to be able to make the cost lower. And I think this is something we have not been able to tap into so far. So technology is the way to go to make the saving, to make this segment of business attractive. Then the other area we need to explore also is how other sectors of our economies have been able to do that. And here I'm thinking about banks, for example, which are comparable to us to some extent in the same sector. I'm looking at microfinance institutions. I'm looking at telecommunication companies, which came much later than us on the continent. You see how they are able to tap into the small business and retail business. So what I would suggest, actually, one of the areas to be able to grow the penetration is partnerships. Partnerships with those sectors, banks, MFIs, cooperatives, telecommunication companies, supermarkets, to partner with them to be able to reach those people we are not able to reach now, so that they serve as like a distribution channel, but at the same time, a claims payment channel, so that we can have more people. Otherwise, with the traditional way we are doing business, we are not going to increase penetration significantly. Thank you.